Warren Buffett is finally retiring. After decades of shaping the financial world, the man who turned patience into billions is stepping down. Love him or not, there's no denying the weight of that headline. So how did a paperboy in Omaha end up becoming one of the richest and most respected investors in the world? This breakdown walks through the key moments, the smart plays, and why his approach still matters today. What's your favorite Warren Buffett moment? Check out the full details by visiting the link in the description. Why Buffett mattered to me. When I was a teenager in the 90s, I read just about everything Buffett ever published or was quoted in. Back then, I spent so many hours in the library just trying to absorb the way he thought about risk, money, and patience. That mindset shaped everything I did after. I didn't follow the exact blueprint, but the principles were baked into every move I made. I became a liquid millionaire at 38 and walked away from work at 42. I can't help but thank Warren Buffett for that. The early hustle, building before anyone cared. Buffett wasn't born with billions. He started like most of us, with small wins and relentless curiosity. Born in 1930 during the Great Depression, he was flipping gum packs and delivering newspapers before most kids learned multiplication. At 11, he bought his first stock. It flopped. But that wasn't the point. The seed was planted. At 14, he bought farmland, real asset, real income, real leverage. He understood value before the textbooks ever caught up. By 26, he launched Buffett Partnership Limited, not with fanfare, but with focus. He didn't wait to be ready. He moved when he saw opportunity. That pattern never changed. Turning a dying company into a dynasty. The Berkshire story doesn't start glamorous, it starts messy. In the 60s, Buffett started buying shares in a struggling textile company. Berkshire Hathaway was a shell of its former self, and most investors saw a sinking ship. But Buffett didn't care about the fabric. It was the cash flow potential he was after. He took control in 1965, pivoted it toward insurance, and opened up a permanent pool of capital he could reinvest over decades. That wasn't luck. It was discipline. While others tried to time markets, Buffett was busy buying entire businesses that printed cash. Berkshire stopped being a textile company and became something else entirely, a fortress of compounding. Building a cash machine that never slowed down. This is the part of the story where Buffett starts printing money, not through hype or speculation, but with real businesses that spit out cash year after year. In 1972, he bought See's Candies, a company most investors would have laughed off as boring. That deal became a masterclass in understanding brand loyalty and pricing power. Then came the Washington Post, where he built a relationship with Katharine Graham and doubled down on media when others didn't get the math. These weren't just smart investments, they were deliberate bets on predictable returns. Buffett wasn't chasing moonshots, he was stacking wins. He stuck with what he understood and squeezed every bit of value out of it. That's the kind of discipline most investors never learn. It's also why Berkshire kept getting stronger while others tried to time the market. Betting big on brands that last. Buffett wasn't just buying businesses, he was shaping American industry. He took a massive stake in Coca-Cola after the crash of '87, and that turned into one of his most iconic plays. Then came Gillette, Wells Fargo, and even a bold move into Salomon Brothers during its scandal meltdown. Most investors run from messes. Buffett looked for undervalued gold buried in the chaos. He didn't flinch. He understood brand power before brand power became a buzzword. These weren't flavor-of-the-month stocks. They were foundational. Businesses that would keep churning profits long after the headlines faded. That's what separated Buffett from the rest. While Wall Street chased earnings reports and hype cycles, he played the long game and won, over and over. Staying calm when everyone else panicked. When tech stocks melted down in 2000, Buffett looked like the old guy who didn't get it. People called him out of touch. Turns out, he was just waiting. The dot-com bust validated his entire strategy. Then came 2008, and while panic spread, Buffett wrote billion-dollar checks. He backed Goldman Sachs, bought into GE. Those weren't bets, They were signals to the market that rational money was still in the room. That's when the world finally understood that Buffett wasn't lucky. He was disciplined. In 2006, he announced he'd give away the bulk of his wealth, proving once again that money was never the end goal. It was a tool, and he planned to use it well. The quiet exit. No one saw coming. Now he steps down. After 60 years of building, buying, and staying calm while others lost their heads, Warren Buffett is handing over the reins. His announcement wasn't flashy, because that's never been his style. He leaves behind a machine that runs on patience, clarity, and long-term conviction. Most CEOs worry about quarterly earnings. Buffett worried about owning businesses that still made sense decades later. The numbers are wild, over $100 billion to his name. But the real flex is how he did it. No shortcuts. Just compound interest, common sense, and a brutal filter for anything that didn't pass his test. If you're looking for proof that boring can win, this is it. What Warren Buffett really proved. Buffett didn't build a fortune on luck, timing, or trend chasing. He stuck to what he understood, kept his emotions out of it, and let compounding do the heavy lifting. The guy made patience profitable and proved that boring can be brilliant. He wasn't trying to impress Wall Street. He just wanted to own great businesses and sleep well at night. That mindset built one of the most valuable empires in history. If that's not a blueprint worth paying attention to, I don't know what is. Thanks for watching, and if you found this video helpful, don't forget to like, subscribe, and share it with your friends. Also, don't forget the link in the description.